Hello, 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 everyone. It's going to be challenging. No comments were popping up. The comments are broken. Fantastic. I can see them on YouTube, but that gets to be a problem. So, I was wondering why Patrick wasn't in first, but yet he was. I'm not going to be able to take as many questions in this morning. I can't put them on the screen because they're broken in friggin' Ecamm again. Gosh. All right, Powell speaking right now. Doesn't look like it's his prepared remarks. So, not thinking it's going to have as much impact on the markets because it's pretty much prepared remarks. I mean, the first thing off the thing was, let's see, talking about, climate change and can't use the Fed's tools to deal with climate change without a change in mandates, blah, 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 blah. Really? All right. So let's just get this out of the way. Where did I stop? Good morning, Martinez. Good morning, Charles. Uh, hey ho, Waka Waka. Good morning, Andrea. Hey, CD. Good morning, Coco. Good morning, Waramzafal. Options 22. Good morning. Yes. Powell, see, Patrick put it in here. Powell, Fed must avoid temptation to broaden scope of it to address social issues. What? You, all right. The dual mandate isn't stupid. Let's just get rid of the friggin' Fed. Can we stop with this garbage? Now, what you're gonna have Fed try to address social issues with monetary policy? That's gonna end well. That's gonna end well. Good morning, Connor. Good morning, Jacob. Good morning, George. Good morning, hey everyone. Good morning, Anissa. Markets up. Drop the duck. Drop the duck. You want the duck? Let's see if we can get the duck. Let's see. There goes there. What the duck is going on? There, we got a double dose of duck. All right. All right, so we got Powell speaking. We had the business optimism index coming out still lower than previous, but higher than forecast. Let's see where else we sit. That's it. I mean, that's it. You got wholesale inventories coming out at 9 a.m. Unless that's a really expected to tick up, which is bearish, but does contribute to GDP. So that's where we sit. Other than that, very quiet day after Powell speak, unless there's some other Fed speak I am not aware of. Market, you can see bouncing up. Google down pretty substantially. Tesla up a little, but pretty quiet. Oil and energy slightly up, some mix, but slightly up. Microsoft up 110 basis points. Overall, let me refresh this since we've had the shift since Powell was speaking. So you see energy leading in basic materials, followed by consumer cyclical, comm services taking it in the shorts today. Fed watch still 76% for the 25 basis points, pulling back a little since last night, but not substantial. Still in neutral mode. So let's see. Oh, by the way, we're still back in negative gamma. Gamma flip is about 39.50 area now. So this can be acceleration to the upside, which takes it closer to neutral gamma, or acceleration to the downside. So you get acceleration either way. Remember the huge gamma wall. We're actually trading just above that 3,900. So I think, unless we didn't bounce back that much, I have to double check. But 3,900 is a minor gamma area. Major is 4,000. Let's get that out of the way. Albertsons was a beat this morning and a slight gap up. I need to look at any comments they have related to consumer, groceries, and inflation. So that's where we stand with that. A little bounce back. Yeah, 39.10. So back above. Breaking that first key, that 39.03, 39.02 level, and bouncing back. So I am still focused on going into the open at 3,900. Then I'll focus on today's pre-market lows at 38.91. And then my major line in the sand is right around 38.77, 38.75 for any breakdown plays. But you can see here it's going into remnants of a clear path on the 4-hour. And as I talked about yesterday, I'm taking this level down a bit. Going to fine tune it just based off this clear path. You got that 77, 78 level, but I'm going to be focused closer to this key reversal area from last Friday, 72. So going into this area overall, if we do roll over and sell off, you have a ton of support. You actually have a ton of support. So not looking then for a rapid decline unless we get major momentum with accompanying market internals being very weak. Even though you have a clear path, you have a lot of stopping points, like the 1-hour pausing area, 38.73, the couple little breakout areas that were broke out from prior resistance. Even below that, you have a ton of support points. So this is an area that I would be looking for choppier price action in, especially since we have CPI on Thursday. Based off where we're trading now, about 39.17 is the area I'm watching for a potential little breakout into the clear path above that we sold off end of the day yesterday. So you see here 39.17 was prior support, becoming resistance, testing overnight with that resistance area, but you do have a clear path up here and very few stopping points. So if we do get to more of a trending market, I would expect it to be more possibly trending up than down. 39.17 will be the key area, but 39.33 is a significant stopping point from resistance that was established pre-market yesterday that we broke out from on the open. So I'm expecting some key resistance there again. NASDAQ, which did officially barely trigger the double after hitting the first stop reduction. Let me put up what changes or invalidates the double at this point. Would be a close below 10,989 or a trade below 10,909. So a closing bar on a 4-hour basis below 10,989 or a trade on any time frame below 10,909.75. Other than that, it is still in play. Still triggered, but of the lower probability variety because of two things. Against the rotation zone, you see, even with that run-up, still closed within the rotation zone. And the testing for rotation zones was done on a closing basis. Since you can get spikes into it and even through it and closing back into it. Key resistance right now. Again, it's going to be challenging for me to reply to comments. 11.2 is the area I'm watching into the clear path from yesterday. The stopping zones are about 10.308 to about 10.365. I'm just using that wide area. And remember, you still have the 50 on the daily. The only area you see here catching on the bottom of the 4-hour rotation zone, just dipping below this prior resistance, becoming support, but back above it now. So, warning sign for me is about 11.142. Then I'll be watching today's pre-market lows, 1100. We break below 1100. I'm going to about 1132 to 11,000 as key support. Again, same thing as I talked about with the S&P. You're going into a fair amount of support. Although if we start breaking 11,000, I will be focusing on a retest of this low area from the NASDAQ. That would not be good from the NASDAQ. Spiders. Very slight gap down. On the rally, about 388 is the first level I'll be utilizing to the upside. And then back to about this 390.40 area. And then there's not much. So this is where, based off where we're opening today, I will use the harmonic. So you'll have to do this yourself. But roughly, I'm just going to do it from yesterday to give me an idea because we don't know exactly. Yesterday's lows were 387.68. We're trading 387.68. Sorry, 387.68. We're trading 387.66 right now. The close was 387.86. So roughly the key area on a rally above 390.40, my key area will be between 390.70 to 391.44. That'll be very key since we have a clear path to the upside even on that 1 hour. And if you look here, the little pause area on that 15-minute, 390.40, 390.70. So that's my first key area on a rally. Besides, you could bump these down a bit if we open much lower. But if we open much lower, the first thing will be for the target of the gap fill back to 387.86. The key support area is 386.22 still. 386.22 to about 386.50. The Qs, just a slight gap down, so that's key. But key support on the Qs are a lot easier. 269.14. Then the gap fill, which we have a little range, 268.77. So 268.77 to 269.14 are key support. Even 268.56 just below that is support. We break below that, that's when we could get a quick move, and not necessarily today, back down to 266.84. Below 266.84, it starts getting interesting in the Qs. To the upside, again, do your same thing. Do your same thing. This is a great area to use the retracement harmonics. I'm just using them yesterday's low because we don't know yet. But based off of that would be about 272.61 to 273.28. And everybody knows you get a close then above that 62.5. You target the most recent highs if they can get a bull move on. Back to the Dow. Come on. Nothing's really changed. Stop reduction. Where I get stop reduction for me is around 33,050 on this. So other than that, still holding up nicely. I will retarget the 34,020 area to about 34,080 on a move up. But my key target for still on this week in bullish mode is 34,377 to 34,400 initially. Russell. Bouncing off of Russell's actually held up the best. You see still closing above Friday's highs yesterday. A little retest the 1797 area, which was a breakout play from before, and bouncing up. I will be using 1823 to about 1828 as the first target area on a rally. The major target area coming in about 1835, and then beyond that is 1845. The key breakdown area I'm watching is 1790. DAX inside day so far to yesterday. So on rally mode, 14.911. On pullback mode, 14.6. Other than that, not much going on. Notes pulling back just a little, but still an inside day from yesterday. Key support still 113.24. Still watching for a slight push higher if we get above yesterday's highs, but there's not a great setup right now in the notes. Dollar index was a little stronger earlier, turning lower, but still within yesterday's bar. If we break yesterday, if we break 102.49, still focused on that 101.95 to 102 area. Key resistance, major resistance, 103.50. VIX, not much. It's still just in this huge consolidation pattern. No point to me besides looking at some stuff intraday. Crude, inside day from yesterday. The only thing that gets me interested if we really break above yesterday's highs. Other than that, not much going on with crude. Natty gas, still, this is what I'm watching for to see if it gets some support back down here and we get a little mini double bottom. Yes, this did trigger a little aggressive percent B buy. That is still valid, though, until we get a close below yesterday's low, which is why you have to use a close below yesterday's low as a potential exit point, because many times you get this kind of reaction, and I'm watching for the double bottom setup. And that's not a huge rally. That's a minor bounce play, as you can see. Gold, still pausing, watching for the rollover. Lots of resistance up here, so it's just in trailing mode there. Copper, which we touched on the podcast. Hope everybody had a chance to check out the Jeremiah Uriel podcast. Coming in really close to that stop reduction area. First major target on the weekly. Coming up overhead. Lots of opportunities to get in that copper play over the last couple months. Japanese 10 years, slightly above 50 basis points. So going to keep an eye on that if it's rallying more to see if we get more Bank of Japan buying, because we'll be targeting a rollover play again in the yen. Inside day from yesterday. If it starts trading above yesterday's highs, I am being patient and watching for another rally to this topping area, especially about 133.50. Euro, I'm watching for a potential more significant topping pattern right now, unless it really plows through this 107.80 area. So that's the minor stuff. Above 107.80, the only thing we don't have a major pausing bar just yet. We might get one going into tomorrow, but we're still at 107.99, so 108 is the only short-term minor target. By the way, let me jump back here to the euro. The key support is right here right now. So the only thing that grabs my attention but doesn't put me in bearish mode, is if we drop back below 107. Pound, not much going on here. The pound and the euro waiting for the next major setup, but there's not much. I will keep an eye if we do break above yesterday's high, with the target area being 123. Bitcoin, still trying to move on up. Still key resistance above the 17,250 on any breakout play. Especially if the NASDAQ gets a rally on again, the next key target for me is 17,804. Which is still in major consolidation and well below the breakdown zone. So it's just a short-term stuff. Tesla, pre-market, the insurance registration numbers out of China were horrible again, but everybody's still going off the, look, they're going to sell more cars at a lot cheaper price. That's great. It doesn't help their earnings. But 124.50 is still the breakout level, 127.30, 130.13, and then pay close attention to about just below 134 is the rotation zone. Anywhere in here is a preliminary area to watch for. So any plays to the upside are still very aggressive, and it would be aggressively trailing a stop, especially with daily cycles back to the top. Weekly cycles could still run up, but we could still see another cycle rotation before that happens. To the downside, I'm focused on yesterday's lows. Besides, anybody can do those gap harmonics. Yesterday's lows, 117.11. So we start breaking below that 117 area. I will be watching for that gap fill to 113.06. All right. That's it. Good morning, John. I can't scroll back through all the comments right now. Sorry, I could not. It looks like Sterling's putting up Powell comments. Fed should focus on its goals, stick to its knitting. Powell says Fed won't use its tools to promote greener economy. Well, okay. How are you going to promote a greener economy unless you literally do targeted? What are you going to buy bonds or stuff from sustainable companies? I mean, this has all gotten to the point of absurd. This has all gotten to the point of absurdity. Jeez. Let's just check in with this. Sorry about the comments. I can't keep up. Check your JP Morgan topping pattern. Remember, bank earnings also kick off on Friday. That is a weekly double top. So you do have a weekly double. Remember, JP Morgan, when are there? Yeah, they are Friday. Just had to double check. So JP Morgan is on Friday with a lot of the other banks' earnings, but that is a valid weekly double top. So, which in Friday earnings, I mean, if they posted, I guess, really bad and closed the week below, it would need a weekly trigger, but a close below 128.43 would trigger it on a weekly basis. The rotation zone would be out of the way, but the 200 would not. But that is a fair topping pattern on JP Morgan. I'm just looking to see if they beat with earnings, because it's right at that 50%. The beat with earnings, look at that prior key level that was already on the chart, 145.95. Is roughly the 62.5, so that would be my target on any upside move. By the way, you still have a gap left behind from last February you see that from a weekly basis. All right, looks like it's going to head into the open. Let me just see. Sorry, comments weren't working. I'll work on that. So hopefully they will be working this afternoon. I will work on that when the market quiets down after the open. But the key level I'm watching straight off the open in the S&P is about this 39.12, 39.13 area for a close into there. Then still 39.17 to about 39.18 is the next little level. But you get into above there on a short-term basis, it could get into a little quick rally pop. All right. Everybody have a fantastic trading day, and I shall talk to everyone later. Bye for now.